Good morning, traders from each and every part of the world that you're joining this series of the daily morning market call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global markets. And today we will begin with our usual standard procedure of going through what has happened in the economic forces which drives the market. And then we shall go to see the interpretation of that on the charts. But before we begin, I would like to bring it to your attention that this is going to be a pre-record YouTube video to mean that you could access it on our YouTube channel at HFM Kenya. Kindly visit our YouTube channel at HFM Kenya. Like, subscribe, and click on the notification button so that you are not left behind in this financial literacy journey. The YouTube videos also are quite informative in bridging the educational gap, so it's quite important. So I'll give a 5-second moment of silence to allow you literally click the subscription and button. Nice. So moving on swiftly, we go to the economic calendar to see what has been happening. Very nice. So yesterday we had CPI, PPI numbers coming out soft, and PPI is producer price index, which is an inflation indicator showing the cost of producing manufactured goods, which we know is later transferred to consumers in the grand inflation data named consumer price index, or CPI. So we see PPI informing CPI because when prices of goods and services are high, of course that cost has to be passed to the consumer. CPI yesterday came out soft, to mean we see a cooling inflation in the United States amid concerns of the inflation that we were seeing before. So what would this mean? It would mean, from the trend that we have been following in various asset classes, we shall observe a slight retracement because the numbers came out low, soft if you may like, negative also if you may like, at 0.2%, with the anticipated or consensus at 0.3%. As we walk into today, which is Wednesday, the 15th of January 2025, we also anticipate CPI data to be printed today, which is right here. Consumer price index, which is right here, year on year and month on month. If it comes out positive or higher than expected, of course we will see the overall direction of trend proceeding. If it comes out lower than expected or softer, like we have seen PPI, which came out softer, we might see it confirming a cooling inflation. So having understood that, we move to the charts to interpret this in real time. Before we proceed, also on fundamental analysis, where we look at geopolitical and social forces moving the market, we are aware that the incoming president of the United States, being sworn in on 20th of January this year, has been responsible for moving the market drastically when he first assumed office in 2016. So we expect quite an interesting 4 years to see market direction. Remember, market direction either on appreciation to mean moving up, like we could see here, or depreciation to mean moving down, like we could see here. are controlled by economic geopolitical forces. So with the inauguration of Donald Trump into office, we as retail traders, we as investors would like to participate in a volatile market where there is movement of price. That's how we take advantage of possible profits. So moving on fifthly for EUR/USD from the daily time frame, we could see from the daily time frame. From yesterday, we said if CPI comes out lower than expected, we will see price moving to the upside. If it comes out higher than expected, we will see it continue moving in the downside. That yesterday we saw the price moving in this daily candle. Let me zoom it in, being bullish to suggest that the CPI data came out softer. So if you go to a lower time frame, would see a retracement back into premium. So as we anticipate CPI, what are we likely to see? We are likely to see two possible outcomes. The first outcome is when the data comes out hot or higher than expected, which would mean inflation concerns in the United States, would see price retrace to the downside to continue taking out the lows. So the sales would be quite eminent. On the flip side, when we see the CPI data coming out warm, we will see price breaking these highs and price moving to the upside. It is important to have this in your trading arsenal, that interpretation of economic forces is slightly done better after. I'm sorry to disappoint the news traders, but in the long run, we know that the market forces moving chart and price action is determined by these particular forces, not before they happen, but after or in anticipation to. That's when we get in for the rides. We will expect also to see retracement in GU. This again is the daily time frame. Back to the daily time frame, we see it close with an almost doji candle, meaning indecision. If you go to a lower time frame, maybe the 4 hour, which we see a slight retracement, right, because of the warm data which came out lower than expected. A possible scenario in all USD, the major pairs, we'll see a bearish in all USD quote currency. We see this retracement also happen. Again, reacting from with slight fake out and in anticipating of the incoming CPI. For US quote currencies, with the US coming fast, we know that overall we were in an uptrend, making higher highs, lower highs, higher highs, lower highs. Now we see a slight retracement. Reason? Soft PPI data. For USD JPY, we see also the same scenario, but much more of consolidation, where prices is neither taking out the highs or the lows. Would want to see a clear market direction, which could be possible immediately after CPI is released. And in all the context that we have talked about this morning, for entries, of course, we know that we would like to enter on areas of interest. Areas of interest would be supply and demand, would be support and resistance, would be higher time frame trends, would be order blocks from a higher or relatively lower time frame if looking for a high risk to reward. For USD CAD, we also expected to see this retracement because of the soft PPI numbers, anticipating CPI numbers. Now, in the same fashion and style that we have interpreted PPI numbers, we use the same analogy to interpret CPI numbers, which are going to come out today during New York session, during New York Open, so that we are able to determine market direction for easy entries and possible profits. For gold, from the daily time frame, yesterday gold closed with a bullish candle, but did not close above the previous day bearish candle. To mean we had a bullish day, but not entirely considered to have taken the highs so as to continue riding the trend. But if you go to a lower time frame, we know that we see that gold obeyed fundamental analysis with the CPI come out soft, meaning a technical interpretation of the charts to be weakening the USD. So we see price moving to the upside. But at the back of our mind, we also understand that among the greatest forces when trading commodities are geopolitical events. And this we monitor through the daily happening of power play in the international space. And as we know, the entry of Donald Trump is going to shake up a little bit. We see a little bit of diplomatic policy adjustment from war fronts in the Middle East. We see what diplomats would call soft diplomacy in Greenland, Denmark, where we see an act being presented in the US Congress to have then Greenland be a part of the United States. Of course, this is not going to be smooth. We go to the Eastern Europe, where we have another war front which has been ongoing. We will see the retaliation or the behavior of President Vladimir Putin on the adjustment of diplomatic policies in the entry of Trump. And I think it's going to be as clear as day when Trump comes into office on 20th of January after his inauguration, which is going to be also the Martin Luther Jr. Holiday in the States. We will see now the implementation of this, and we know every opportunity we get to interpret fear in the market, we know that investors would rather have their money in a safe haven, and gold has provided that over the past 5,000 years. So that in mind, as a disclaimer, this is by any chance not financial advice. It's purely made for educational purposes. So do your due diligence and observe proper risk management to enjoy longevity in this space. And for those who would like to join the online trading for these financial actors or financial assets, kindly visit hfm.com and attempt to register for an account to have our experts contact you and guide you through the process, and also lead you to educational materials that are going to bridge the educational gap so that you trade from an informed perspective. Until tomorrow, the same place, the same time, keep safe and God bless.